So if you can afford something today, buy it. Like, stop trying to outsave the market. Find the home that you can afford and buy it. The first few years of owning a home, the lender's your landlord.
Okay, so speaking of real estate, I would love to hear you two as agents in Indianapolis go back and forth a little bit about the idea of a 50-year mortgage. It's popular in the news right now.
Is that something we're doing? Is that is that something people are talking about right now?
I think so. Now, myself,
is the leader of the free world.
The leader of the free world has proposed it, from what I understand.
Yeah. Well, so explain, like, a little bit about how it could work and what the reality is for people. I'm one of the people who was lucky enough to buy, my wife and I, right when we got one of those 2.5-3% rates. And so, like, there's a weird balance between, like, feeling stuck, but also feeling a lot of opportunity in, like, a HELOC loan for a rental property or something like that. But, like, yeah, I'd love to hear your guys' take on, or hot takes.
Can you get a 50-year HELOC? That's a question,
I don't know if any details have been released on it.
No, I know, but I kind of wonder. I wonder what all those other programs, aside from the Fannie and Freddie conventional,
There's concepts of programs, but I don't know that there's any concrete ones yet.
Yeah. Well, I want to hear your take.
Okay.
Andy.
Let me start by saying I'm not a big, like, news watcher. The majority of my information comes from the news channels posting their stuff on social media and me grabbing it from there. I'm not the guy that goes home and...
Oh, so you're an American.
Correct. I am a millennial American. So, I mean, the big thing for me, I would say, and again, so I was out at that Zillow conference last week, and one of our agents that I was with, who is very much a news watcher and follows a lot of these different things, he was like, well, I think the next thing that's going to happen is I think they're going to have a 40 or 50 year mortgage. And my exact words were, no shit. Okay. So let me think about that. So, like, I pondered on it a little bit, and and then they announced, like, hey, let's look into this type thing. I don't think it's a good thing for our market specifically. Reason being, going back to what we had just talked about just people being uneducated. I can't tell you how many people that I've talked to that have been like, well, I can't afford a house. And it's like, well, how do you know? And they're like, well, I don't make a lot of money. And I'm like, but you pay rent. So
yeah,
your money for housing is going somewhere. So, I mean, it's more of an uneducated thing. It's like, they just have this opinion formulated. I can't afford to buy a house. I'm not in a position to buy a house.
Yeah.
And then I get them connected with a lender, and they're like, dang, that's actually a lot easier than I thought. And I can afford, my buying power is way higher than I thought it was going to be. Now that's obviously me talking from a Midwestern demographic here, so obviously we're in a very much more of an affordable housing market than if we're on one of the coasts. I don't think it's a good thing here, but I think that people will take advantage of it. I don't think it's a good thing, but I also don't think it's a bad thing, right? So if you've got somebody, I compare it to a car loan, right? It's like, you can go out, some people can get away with doing a 48 month loan on their car. But if it's not the payment that they want, they're going to extend that out to a 72 month, and their payment's going to go much lower. So I look at it the same way on mortgages, but it's way longer, right? We're talking about maybe a 2-year difference on a car loan. We're talking about a 20-year difference on a mortgage.
Yeah.
So I look at it in a negative light of, I think that there's going to be people that take advantage of it, and the banks are going to just bankroll because 20 more years of interest, all of that stuff. So I think the banks are going to benefit from it. I think the general public, I don't think it's a good thing, but if I'm looking at other markets, right, I think that does ring true for the younger generation right out of college, right? Let's talk about the Gen Z folks, whether you love them or hate them. They're not wrong in the fact that their parents maybe bought a house for, pennies on the dollar of what is being charged now. So I think that what it will do is it will enable more people in those more expensive markets to be able to get in and then potentially at least get in and start building equity and give them the opportunity to refi later on down the road, where they're not just, because at the end of the day, if they're renting, they're not putting it towards anything. It's just going to the landlord and making the landlord money. Even if it's a 50-year mortgage, I mean, it's going to be much lower than a 30 or a 15, but they're going to at least be putting money and building equity. And they're going to be able to capitalize on appreciation, right? I capitalized on appreciation twice, especially in like when we sold our house that we built in McCordsville in 22, right? It was just, there was just an insane amount of appreciation in that 4-year window. But I think it's going to help people in those more expensive, higher priced metropolises to be able to afford sooner, and give them an opportunity to get in. But ultimately, I mean, I think the humans are going to right? They're going to do what they want to do. And they're not looking at a lot of people aren't looking at the long term. They're looking at what is going out of my bank account today on a monthly basis. And so they might look at a 30 versus a 50, and they might look at the 50 and go, well, that looks a lot better for me now. But again, so I really haven't had enough time to really formulate an opinion, but that's kind of my 50,000 foot view on the 50-year mortgages.
You want to hear my take?
I'm chomping at the bit over here.
Well, I mean, I think I agree with a lot of what you said, and I'm trying not to just like piggyback off of everything, but I love this topic just because, I mean, I was an econ major, so anytime like a new financial instrument gets introduced, I'm like, ooh, what's that going to do? It's almost to me, it's exciting. It's like I think of it as like it's like an experiment that we're kind of doing right now, and I do agree with you that it's going to make the banks a lot of money, because what I come back to in my mind is, you know, if anybody who's looked at one of the amortization curve, you know, the amount of equity growth in the beginning, even if you get a 30, even if you get a 20, like it's so slow in the beginning. You're not really building equity or you are building equity, but it's like
front loading the interest.
You're front loading the interest. So most of your payment is interest. And so you're just, in terms of that, what you're paying down, you're paying down your loan principal very slowly, and you're paying the lender a lot of money. The first few years of owning a home, the lender's your landlord, you know, and that's true for a 30-year mortgage. It's going to be even more true for a 50-year mortgage. But with that said, what you said about the cashing in on appreciation, or getting to, you know, experience appreciation in a property you own, that's also true. So I think, especially if you look at like the last 5 years, this environment that millennials and Gen Z are trying to buy in, I can't, I've lost count of the number of first-time home buyers I've told, listen, you cannot outsave the market.
Yeah.
Like, stop trying to outsave the market. Find the home that you can afford and buy it, because you can afford it this year. You might not be able to afford it next year. And that's, I do want to be careful in just like people don't have a crystal ball that the market's going to crash. I don't have a crystal ball that there's going to be 10% appreciation. Right. It could flatline. I mean, it's been relative to like 2020 and 2021. The market's been kind of chill, but for me, I always come back to the principle that real estate's an appreciating asset. The old adage, they're not making more land. So, you know, it's, to me, even if there is a correction, let's look at the last 100 years. Real estate appreciates. It goes up in value. So if you can afford something today, buy it.
Yeah.
Buy it. And then now you're riding the wave instead of being under the wave. You know, you're riding the appreciation wave. And then if you're unhappy with your home at some point in the future, go ahead and, you know, trade it and cash in the equity you've built and the appreciation you've built. So I am like you in that I don't think the 50-year mortgage is as crazy bad as everybody is saying. But I also think it is, like, people need to understand that they are not building equity nearly as quickly as they would be with a 30. But people got to keep in mind, people freaked out when they came out with a 30-year mortgage.
Yeah.
That's the other part of this. Is like
I looked that up yesterday. I think the 30-year mortgage came out like right after World War II.
Yeah.
Is when it came out.
And there's like old footage of people being like, this generation is just, they've lost their mind getting a 30-year mortgage. Who could imagine such a thing? And now it's like, here we are in 2025, and it's like,
well, it's interesting.
Very, very normal thing to do.
It's interesting because we look back. I'm not a history buff. So, I mean, you could look back and you could reference this to timing with the Great Depression, right? The Great Depression happens, 2 world wars, a lot of different things happen with the economy. They roll out a 30-year mortgage. Here we are, we had a recession in the mid 2000s. We've had COVID, we've had international affairs, we've had a war, all of that. I don't know, but the timing could be interesting if we looked back on it in regards to when they brought out the 30-year versus when the last depression was versus when we had a recession. And now they're bringing out a 50-year.
There are definitely significant differences, but following World War II, this was the boomer generation.
Yep.
It was the generation where there was a huge population boom, and you could argue they were dealing with the same kind of like, we don't have enough houses for all these people, and like what's going to happen to affordability, and I don't know the exact what exactly home values did across the country from 1940 to 1970, but I know it got more expensive. That's the one true through line to all of these points in history, is all of these, all this economic and political turmoil. Real estate's always appreciated.
Yep.
It's just a real thing. So I think the 50-year mortgage, it's going to be useful for some people, and I do always ask when I work with people that are considering buying property in Indianapolis, when I just talk to home buyers in this market or investors, I kind of talk about like renting versus owning. Like if you're in the position where you can afford to own, it's a no-brainer. Like own and start building equity and get a mortgage. Don't just save up until you can buy in cash, because you'll just be saving forever, and you're not going to accumulate cash. If you're a normal person, you're not this exceptional 10x tech startup person. Like if you're a normal person earning a normal income, you're not going to accumulate cash faster than the real estate market grows. So get a mortgage and start growing with the real estate market. But I do try to be introspective and be like, if I'm talking to somebody in New York City, if I'm talking to somebody in LA, would I tell them the same thing? Like with what their values are and what their rent rates are. They have a much different rent to price ratio. And the average person owning is just completely unattainable. But that doesn't mean in principle it's not exactly the same there as it is here. Like owning real estate, if you can afford it, is going to be a better alternative to just paying a landlord. Because it's one step down the supply chain. That landlord owns the real estate and expects you to pay them for, to cover to their cost plus profit margin. And they may have bought it decades ago and, whatever, their numbers work. But ultimately they're going to charge you what they can justify charging you based on the market. So I think I don't know about specifically LA and New York, but I think for markets that are, especially markets that are more expensive than Indianapolis and other Midwestern cities, I think the 50-year mortgage is going to be very interesting how it impacts those markets, because it's going to make more of the average people have a chance at owning real estate. And at the very least, even if they're paying a ton of money in interest, and like we said, the banks are benefiting huge here, but they're also, there's something good for the consumer here, that they're locking in their price for the home. They have a payment that's probably comparable to what they'd be paying in rent, if not, maybe in some cases less. And yeah, refi in a few years. You can check out our full library of episodes wherever you get your podcasts.